This is Behind Closed Deals.
We'll be chatting with multifamily maestros,
Uncovering their strategies,
and unraveling the latest market happenings.
bringing you intel you can't buy. Hello, this is Hannah Ott with CBRE, and we're excited that you joined our podcast today. Welcome to Behind Closed Deals. Today we have with us co-founder of CF Capital, Bryan Flaherty. This is one of my favorite parts of my job that I get to do. Christine on our team helped spearhead the podcast, starting for a team about a year ago. And we rotate who gets to host this. And so I'm always excited when it's my turn because I get to know somebody, a client of ours, in a different way and get to know them more. And one of the things I love about it is we get to hear how they got started and get to hear their story. And everybody that we talk to has such a cool story. I guess we wouldn't invite any duds on, but everybody has such a cool story. And it's so neat to hear how everything sort of came together. So Bryan, we're so excited to have you on the podcast.
Hannah, good morning. Thank you for having me. I'm glad I'm not considered a dud either from your all's in Behind Closed Deals.
That's right. Only superstars. This is a superstar only zone. So hopefully you were flattered by the invitation because it's for superstars only. So
Absolutely. Look forward to it today.
yeah, awesome. Well, I'd love to start by hearing about how you guys started CF Capital and sort of what your origin story is. We've had the pleasure of working with you for the last couple of years, and we're working on a good sized deal together right now. And so we've enjoyed it, but I'd love for our listeners to learn a little bit more about your background and how you guys started CF Capital.
Yeah, sure. Well, thank you again for the invitation. Look forward to today. So CF Capital was founded in January of 2020. We officially incorporated at that time. We soft launched to family and friends in March of that year. Obviously, a unique time to do so.
About excellent timing. Everyone
About
loves
7 or 8, about 7 or 8 days before the president came on and said, stop the spread. But before that, I'll rewind and then we'll kind of fast forward back into the origins of CF Capital. But before commercial real estate, I was actually your classic kind of MBA to Wall Street type of guy. I was with an institutional equity firm. We were running a couple $1 billion and was, having a lot of fun traveling all over the United States, all over the globe. And really at that time, kind of had some soul searching and saying, gosh, I like Wall Street, but I love real estate. And I love kind of what I was doing on the side, what I was learning about, kind of, reading about, listen to podcasts on. And, sometimes when you're in it, you can't see it. But like so many times your spouse, in this case, my wife was like, hello, like, why don't you do this for a living? Like you're constantly talking about commercial real estate. You're constantly listening, reading books on it. And, this is all 10 plus years ago. And, at that time, I'll never forget, we were actually on a trip together, in Europe. And I looked at my wife, she's pregnant with our first child. And I said, hey, when we go back, I'm going to leave Wall Street and I'm going to take your advice and jump into commercial real estate. And she certainly had okay, is this the right time to be doing this? Type of conversation. But at the same time, there's never the perfect time. So I knew I needed to, have a little self-education myself. I needed to change my perceptual positioning and not be looked at as just the institutional Wall Street guy, but wanted to get to the point where I could launch my own private equity firm, which is now CF Capital. So I looked at my kind of interim time to say, I need to go more or less apprentice, which is kind of the lost art in today's world. But I was a, former colleague of yours at CBRE, was able to be a part of about $1 billion worth of transactions there and really use that time to say, okay, how are the other big players doing it? How are they capitalizing their deals? How are they structuring the capital stack? How are they financing them? Who are they having manage their deals? Who are equally as important, they not have managed their deals, and really just kind of learn the tricks of the trade from all the great people that you guys at CBRE get get to work with and say, I like what that group's doing, this group's doing, over here, let's steal a little bit of that idea and kind of pick and choose and really weave that into the fabric of what is now CF Capital. So I was there for a number of years. I was getting my CCIM designation. And at that time, I met the co-founder of our firm with me, Tyler Chesser. Tyler was actually a broker as well. He was doing a little bit more kind of middle markets type of and smaller type of transactions, think 20 to 100, 150 units. So I always say it was kind of same ballpark, just different field that we were playing on. And we would get together for, coffee, lunch, drinks, things like that, kind of just share what we were seeing in the market, tips, tricks, things like that. Like I mentioned, I was pretty confident that there was life after brokerage for me and knew exactly what that was going to be. Tyler was building up his own portfolio on the side. I was investing in deals with some colleagues of ours. And really after a number of years, 2-3 years of those types of conversations, Tyler and I realized, hey, we can do a lot more together than we ever could separately. I was also very green in my thinking and thinking that, hey, I'm going to launch my own firm. I'm going to run it. I'm going to be the president, CEO, founder. And during that apprenticeship time at CBRE, you kind of learn like, hey, commercial real estate truly is the ultimate team game. And not only do I need other team members, but having a co-founder, having a partner, a confidant, somebody that I can bounce ideas off of, work through, issues that we're facing, like is not only ideal, but it's, in my opinion, a must in the industry. So Tyler and I really spent 2019 kind of winding down some of our brokerage, building out the infrastructure for CF Capital, kind of bringing things full forward here before launching officially in the first quarter of Q1 of 2020.
That's awesome. That's such a good story. And there's pieces of that I didn't know. So we've had, like I said, we've had the pleasure of doing business with you guys. We said a couple of things that I think really resonated with me. You talk about apprenticeship and how it's like a lost art. And I 100% agree with that. That is how our whole team, though, is really set up, is apprenticeship. That's how I learned the brokerage business. I had a mentor before I started working with George John, and he's an awesome mentor for our team. We have, I realized the other day, I think we have 6 people under the age of 30 on the team right now, which is awesome. And so the other thing that you said is partnership. And I think the best organizations that we work with have, and that we see operating our space, have really strong partnerships at the top. Whether it's, the partnership between a founder and maybe a CFO, or truly 2 co-founders. But I love seeing that sort of yin and yang of 2 really good partners working together. And, that can happen whether it's your business partner or for you, like you mentioned, like it's your spouse that kind of came in there and said, sort of pushed you in that way. So it's exciting to hear how apprenticeship and partnership really came in both the formation of CF Capital, but I'm sure that's integral to your success today.
Yeah, I wouldn't be here without both those things. I mean, like rewinding a couple hundred years ago in our country, it's like, hey, you want to be a blacksmith, go apprentice, like go do it, but also learn from some other folks. And to me, it almost seemed so obvious at the time, like, hey, I got to jump in the deep end, but I can't service clients, without some sort of guidance and, mentorship along the way. So whether it's our industry or any industry, and, I think the medical field probably gets it pretty right. But outside of that, it's almost like I mentioned earlier, a lost art. So definitely a big proponent of that. And yeah, as far as the partnership goes, there's plenty of times where I'm sure Tyler would say he couldn't do this without me. I know I would say I couldn't do it without him, because you have to have those days where you're like, you're balancing one another out, not only in your skill set, which we do. Within our team, there's definitely, teams of our business that Tyler's kind of the number one point on. There's other teams within CF Capital that I'm the point and I run kind of quarterback on. But at the same time, you have to have that yin and yang. You have to have that balance to say, hey, I'm doing it this way. Am I thinking about this the right way? Help me with my blind spots. What am I not thinking of? Where's the risk that I'm not taking into effect here, and let's be sure that we're completely buttoned up and not overlooking anything. And I think it's definitely key to our success and what we've realized over the past 4.5 years here. And it's something that, like you mentioned, I see in a lot of firms that are much more mature than us. A lot of their success goes back to, whoever's leading the teams and saying, hey, I have a confident partner that I can lean on in some of those times of headwinds that we all face, within our industry.
That's right. It also requires a certain level, I think, of humility to say, okay, I'm better off actually as part of a team, as part of a partnership. And so I think applaud you for having all those things in place. So that's great. So CF Capital, I'd love to hear more about what your day-to-day is like in terms of what kind of deals are you guys buying? How do you raise your equity? And then every company has their, we call it their superpower. So what is CF Capital's superpower?
Yeah, well, let's start there. I mean, like I mentioned earlier, the beauty of commercial real estate is it's the ultimate team game, and everyone plays a role in our success. Like, we couldn't do what we do without our internal team, without our management team, without the brokerage relationships that we work with. I think that there's every player in our industry has their own zone of genius. There's a great book out there by Gay Hendricks called The Big Leap that really dives into this, and it's really finding the opportunity to play in and stay in your zone of genius. For me personally, that's more on the deal side and getting creative and figure out a creative ways to structure deals, to position ourselves to win deals. Co-founder of the firm, Tyler, his zone of genius is on the equity raise side, kind of the marketing side. So again, just an internal yin and yang balance for us. Like, I know about myself, if I were the head of the property management firm, it would not be a successful management firm, nor would it be a successful accounting department if I were the head of the accounting department. That's not a good thing or a bad thing. I just need to know that about myself. So I would say if I had a personal secret sauce superpower, that's kind of my zone of genius, is just getting creative behind the deals, understanding the deals, looking at a deal to say, hey, this is where it's at today. Where's the opportunity to, find value in that? What can we do to improve it or bring it to what the market is demanding? The types of deals that we're buying are typically, we've kind of joked internally recently, if the deal is older than me, we're probably not going to buy it. So it's got to have an 80s.
You opened up Pandora's box. How old are you?
So I am a child of the 80s. 1985 was my birth year. So 80s and 90s kiddo. So we are looking at deals that are kind of early to mid 80s and newer. We're trying to buy. Ultimately we look at deals, and our thesis is we need to be buying below replacement cost, what it would take to build new today, have some sort of operational and or physical repositioning. So we're putting, in most cases, millions of dollars back into those deals, but then have a spread still between our all-in number and what that replacement cost is if they were going out and rebuilding today. So we're trying to buy, like a lot of groups, in the right neighborhoods. We always say we can change a community. I cannot change a neighborhood. So we're looking to buy into A and B submarkets. We look for things that the market demands, so that we're not dating ourselves from an aesthetics perspective on the outside, but also on the internal. So we want things like 9-foot ceilings. We want to have good floor plans, because most of what we're looking to do is cosmetic type of upgrades to the communities that we buy. We like to improve flooring and countertops, cabinets, basically a modernization to say, hey, if it was built in the 80s, 90s, 2000s, it needs a little love. We got to get rid of the shag carpet, the oak type of cabinetry. Let's modernize it, bring it to the standard that a renter today is looking to call home. And then any sort of operational upside that we can find, all the better, because that's dollars that we can find without putting dollars back into it. So we lean on our property management partners to really help us on that side. But those are the types of deals that we're looking at. We're looking in the markets that are, in favor, but also maybe not as hot as others. So we're located here in Louisville, Kentucky. We have about a 3-4 hour radius where we look into in Indiana, Southern Ohio, Kentucky, in Tennessee. And we're not doing that just because, hey, it's convenient to drive to those markets, but we feel we have an edge in those markets, whether it's, an in-depth knowledge of the submarket, whether it's, knowing the right vendors there. Our property management teams have experience in those markets, so they know who, the right on-site team members are that they can place there. They have relationships with the vendors that I just mentioned. It's easier for us to have an edge in such a competitive environment in those types of markets. I know that if I'm bidding against groups that are based in New York or Dallas, San Francisco, LA, yeah, they know it, but they may not know the lines as well as I know them. They may not know or have a personal relationship with, the founders or presidents of some of the vendors, the flooring vendors, the painters, things like that we have. They can give us a little bit of an edge for our investors who we're fiduciaries for.
That's right. That's right. So you guys are based in Louisville, and I know that you guys are very active in that Louisville market. And one of the great things for us at being at CB is that we get to handle the Louisville market. What do you love about that Louisville market, other than the fact that it's number one for rent growth in the nation for, I think, the second month in a row?
We're making all the headlines right now.
Wow.
And I'm a born and raised Louisvillian, so it's home. And it's funny, we always joke internally, your home is almost like your family sometimes. Like, I can talk about it, I can nitpick at it, but like, don't you dare anybody else say anything bad about our city,
I love that.
But Louisville's an interesting market. It truly is. We have a dynamic workforce, a lot of healthcare. UPS's Worldport is here, so it makes us, I believe, last I checked, like the third busiest cargo hub in the United States, just behind Memphis and in Anchorage, Alaska. So we have depth to our workforce. We are not growing population-wise like some of our neighbors to the south, like Nashville. So I always say we've kind of lagged behind Cincinnati, Indy, Nashville, kind of our, the cities within a 2.5 hour drive time of us. But also what's interesting about us is it's not easy to build here, both from a city level. We also don't have quite as many homegrown developers as like you guys do up in Indianapolis. So our supply stays very constrained. Our demand, isn't going anywhere. If anything, we do have positive net migration here and growing population. So the lack of supply, a small increase in demand, we're seeing that in the rental rates that you just talked about. So we like it for all the reasons I mentioned, from both a job perspective, a population perspective, but also we haven't seen the, kind of crazy boom and crazy pop that like a Nashville's seen, that other larger kind of primary markets like your Dallas or Phoenix, where they're delivering, 5, 6, 7, sometimes 10% their inventory on an annual basis. We have a much steadier, healthier. Sometimes I wish it was faster growth from an inventory perspective, and I wish the city was easier to work with. But those are the bounds that we work under. And from our standpoint, when you're owning, it is insulation for us, and it's beneficial for us not to have that new product coming online.
Right. One of the things that you've said several times through this is like, this is a negative, but here's why it works for us. And I think that's one of the things that you have from a mentality standpoint that makes, if I were projecting one of your superpowers, I would say is that you find a challenge, and we've dealt with this in deals that we have worked on together. We were like, every talent has an opportunity. And I've recently called you about something that was a challenge and told you about it. And I loved your perspective of, yep, I understand it. We'll figure it out. And how can you use this to be a benefit to the growth of your company? And so I think you have that's a great mindset to have, for sure.
Well, I appreciate it. We say internally all the time, there's a gift in every challenge. And we also look at our role in the industry basically is we get paid to solve problems. Like, that's what we do. Right. We're rolling up our sleeves. We're modernizing communities. We're cleaning things up. We're bringing new capital to deals. So if you don't have that mindset, I'm not sure how long you can last in our industry, because we're in the people business, and sometimes the hardest part are the people.
So that's right.
Whether it's our on-site residents or the folks we get to partner with, work with. But yeah, I mean, it's the other part of this is like, we're in real estate. We're not really forging any new paths here. We're doing things that have been done for decades and hundreds of thousands of years. So the way we look at it too is, hey, any challenge that we have, someone else has already, faced this and come through it. So again, getting back to the beauty of our industry and having, so many different colleagues out there, we look at it like we don't really have competitors. We just have colleagues. Yeah, we may bid on a deal against one another in one instance, but there's nothing to say, hey, we can't get creative and go be colleagues and joint venture a deal together in the future. So we really do lean on some of our, some of the firms that we have relationships with that may have been around for 10, 20, 30, 40 plus years and say, hey guys, this is what we're facing. This is what we're going through. Have you faced this in the past? What worked well? What was a headwind? What would you do differently now? And, we've been able to really lean on some groups throughout the growth phase of our community or through our firm. And, we're now to the point where groups are coming to us and saying, hey, yeah, see, you guys are going through that. How'd you get through it? How'd you circumvent that? What'd you learn? What would you do different the next time? So it's a way for us to strengthen, our own relationships, both from a, hey, we need help type of perspective, but also to get through it, kind of build up the team and say, hey, we're smarter about this now after going through it, and we'll be better.
Yeah. That's great perspective. What are the growth goals for CF Capital, both, and maybe it can really be growth in any way, but what are you guys working towards from a growth perspective right now?
Yeah, great question. So we run on EOS. There's a great book out there. I'm sure if anyone's listening and runs on EOS, your light bulbs are going off in your chair and say, yeah, I love it. The Entrepreneurial Operating System is from a book called Traction. For any entrepreneur out there that is struggling with putting guardrails on their business or having vision for their business, I could not recommend it more. I always say there's the teams that run on EOS, and then there's the teams that just haven't heard of EOS. I've never, in all of our years running on it, I've never heard of someone starting it and leaving it and saying, never mind, like that just didn't fit for us. But a part of that operating system, it helps you define your 10-year vision, your 3-year vision, and then just reverse engineer. What are you doing for the next year, for the next quarter? And it just helps kind of give you that North Star. So for CF Capital, to answer your question, Hannah, over the next 3 years, we're looking to scale our unit count by about 4,000 to 5,000 units and over 10,000 over the next 10 years. So, we see faster growth over the next 3 years because there will be less trimming of the portfolio. We'll be in primarily growth only mode. After 3 years, we have a couple deals that we've owned for a few years now that'll probably be time to harvest some of the equity that we've created. So we probably won't be growing as fast of a clip, but that's what the growth looks like for us. You asked earlier how we capitalize our deals, and apologies, I overlooked that question. But to do that, when we started CF Capital, it was really all friends and family. It was colleagues in the space that we'd gotten to know during our brokerage careers. Nowadays, it's a mixture of that high net worth retail type of investor. Interestingly enough, we're located here in Louisville. Of our investor base on the retail side, about a third of that equity is located here in Kentucky. The other 2/3 is across the country, some in Canada as well. So technically international. Mm-hmm. But we also have a programmatic institutional equity partner that we've been doing deals with. We will be expanding that a little bit as well, but we'll never lose sight of that friends and family capital. I know in the household I grew up in, I had no clue who owned apartment buildings. I had no idea, what that whole world was. Like, it just didn't even click to me driving down the street. Like, I wonder who owns that office.
Same here.
That apartment complex. Like it wasn't even something that entered my mind. And as I went through my journey and on Wall Street and into the private equity space, I'm a big believer in private placements, not just with our firm, but for any colleagues like ours in any of the, in any of the commercial real estate channels, whether it's retail, office, industrial. But I'm a big believer that folks need those opportunities. There's too much of the population out there that is still like I was before my mind was open to this world. It was just, they've got their stock portfolio, their bond portfolio, and they're almost victim to to that in everything. This is a whole nother podcast we could go down, but everything
For sure.
funneled down to into those industries. And so at CF Capital, we'll always keep those channels open to our retail investors because we believe so strongly that people need it. Like it is a disservice to their families if they don't have these types of opportunities.
Access to that opportunity.
Yeah, exactly. And that's what we look at it. We look at it as saying, we're not raising capital. We're presenting an opportunity to them they otherwise would not have. Maybe it's fit, maybe it's not. If it's not a fit, we don't want them in our deals because they need to be tailoring their own investment decisions that best fits their needs. We're just giving them an opportunity they wouldn't otherwise have because, unless they're going through the REIT channel, things like that, like most folks that invest with us, they can't go buy a $50 million complex on their own.
Right.
I mean, we might have a few, but for the most part, like they're high net worth folks, they're doctors, they're attorneys, they're other business owners, they're, guys and girls that are in real estate, but maybe they're sunlighting their career and they're spending their time in Southern Florida and say, hey, I want all the exposure to commercial real estate that made me all my wealth. I just don't want to be in the day-to-day of it anymore. Right. So that's how where we're going and how we're capitalizing our deals to get there, both a mixture of the high net worth space as well as partnering with some of our institutional equity partners.
Yep. Yeah, that's right. I'm going to ask you for a few predictions and no penalties here if you end up being wrong.
Yeah. When do we revisit these in the future? Hopefully.
Depends on, yeah, that's right. Well, we should keep a little score sheet of these. So what's your prediction for where the 10-year treasury is headed over the next 6 months?
Oh, gosh. You're starting out with the tough questions. If I knew that, we'd probably be doing this from a different location. It's been interesting. I mean, this comes out a few days after the Fed lowered rates by 50 bips. And what was, I think we all thought that the market had some of that priced in and baked in. I've been surprised after they lowered 50 bips that the treasuries have popped and gone the other way. I was hoping, I thought that might happen if it was a 25 bip decrease. With 50. I thought we might eke out a basis points the other way. We're also, not quite a month or less than a month and a half away from the presidential election.
Which will be my next question, by the way.
All bets are off. I think that the Treasury trends lower throughout the year. I don't think that we have a bottom dropping out. If we do, something else bad probably happens. That is a black swan that we're not thinking of or seeing right now. But I think it trends lower from where it's at today. I think we may have 10, 20 bips in it at most over the next 3 months, basically, at this point. I think on the flip side of that, it is interesting. I mean, we all follow the treasuries, and what's as important, if not more important, is what's the spread doing on top of it, and what's our all-in number going to be. And, in our world, it's a lot of Fannie and Freddie, but, what are the other lenders doing out there? I do think that there's going to be a lot of new debt structures and some non-traditional lenders that are offering some shorter term and more flexible type of options. So seeing how they price things over the treasuries is going to be as interesting, if not more interesting, than what the underlying index is going to be.
Yeah. Yeah, no, I agree with that. So who's the winner of the election? Is it Harris? Is it Trump? Or is it George John?
Well, at this point, I don't know who's running. Maybe George has as good of an option as anybody else. That's the one I'm not answering because I have absolutely. I have absolutely no clue who's going to win, but George can certainly have my vote.
I think that's how everyone feels. You do not have to answer that question. We don't need to get political. I'm just sort of teasing about throwing George's name in there. Oh my goodness. How long do you think Louisville will be at the top of the market for rent growth?
It's been interesting. Louisville's great. It's in vogue right now. And it's been interesting to see the influx of actually institutional capital reaching out to our team to say, hey, we've had conversations in the past. You have any deals? Like Louisville's on the radar in a big way right now. 24 months ago, when we're saying, hey guys, now's the right time to invest in Louisville, steady Eddie's the way to be. They're like, guys, I'm getting 30% rent bumps in Phoenix. Like, sorry.
Right.
I'm busy. I'm not even taking calls right now from you guys in, Indianapolis. Yawn. But, as they're now seeing, 5, 6, 7% decreases in some of those Phoenix, Dallas, those types of markets, I think the Louisville's, the Indies, the Columbus, Cincinnati's, I think they're going to remain in vogue for the next, few quarters. I know, like I mentioned earlier, just given we're supply constrained. So do I see us taking a step backwards? Probably not. I mean, we might go back to a more traditional 3-4% type of rent growth. Will some other city take a jump above us? Probably. Just, I mean, the pure number of other cities that are seeing nice steady increases. I don't think we'll stay number one. I think that we'll continue to pump out solid rent growth over the foreseeable future, just because, again, it's simple econ 101, supply demand imbalance, and I don't see that changing anytime soon.
That's right. Well, it's been awesome to have you on the podcast. Loved hearing about how you started, hearing more about CF, and also, just like I mentioned before, I love your mindset, where you're strong on having apprenticeship and partnership, and I can tell through the conversation you weaved in a bunch of books. It sounds like you're always learning. And so thank you so much for joining. It's been a pleasure having you. And remember what George always says, you're only as good as your next deal.
Love it. Well, thanks so much, Hannah. I appreciate it. I appreciate everyone listening. And Hannah, thank you for everything that you and George and the rest of the team do for the industry and for all your clients.
Awesome. Thanks. Thanks for tuning in. Stay in the loop by hitting that subscribe button. And check the show notes for additional resources.